All right, guys, welcome back to the channel. This chart fooled everyone 4 years ago when Bitcoin broke out to its first all-time high. It even fooled everyone 12 months ago, and I'm not immune to this, which is why I'm paying particular attention to it this time round. Of course, there are invalidation signals and there are confirmation signals, which is why it's important that we continue to track it day by day. This is trading and investing, and it's your home of macro cycle analysis. We're looking at Bitcoin, cryptos, the stock markets, and the real estate cycles. Some big moves overnight with the CPI data that has come out for the US, so plenty to tackle in today's video, along with a few other stocks and cryptocurrencies like your beloved XRP, SUI, Solana, and MicroStrategy. So don't go anywhere, hit the like button, subscribe to the channel, links in the video description for TIA Premium. More on that later in the video, but first let's start out with the news overnight. CPI month over month was forecasted at 0.3. The actual was 0.2. You had CPI as well year over year. The forecast was 2.9 and the actual 2.9. So the long and short of it is the inflation roughly where it is, slightly lower month over month. And it looks like the market has welcomed that type of news, but it is very, very short term. And if you have been following the channel, obviously we have been watching the energy prices continue to rocket up now from those lows at $65 back in September of last year. So coming up to 4 months there, and now have crossed another 50% level. So we've been watching this on this breakout from roughly around the $70 level because there's been many swing top breaks. And the point of this is, at least my theory and my analysis, over the coming 6 to 12 months, not next month's CPI reading. The important part here is that we're looking longer term, is that we will potentially see inflation come back. So we need to understand how this is going to affect the markets longer term. If you continue to watch how these energies perform, you are now seeing that their prices are up from the swing lows to the swing highs. 13% here on the heating oil. Natural gas has also had a relatively strong time here, coming out of some of these swing top breaks like from June and from October at those lows there, now sitting up roughly around 30% and oil as well from those prices breaking out of $71 to where it currently sits. It's about a 12% increase there. Now on the flip side to that is the US dollar has also had a couple of days down here. Now, a couple of days ago, there were some news articles back on the 13th of January suggesting that the BRICS alliance is beginning to fail, or at least what they were trying to achieve was de-dollarization, which I found quite interesting because that came out at that current peak, and we've now seen 2 days down. We haven't seen 2 days down like this since all the way back here in November. So now coming up to 2 months, not just red days, but lower highs and lower lows. With this higher close, it might not be likely that we would see a 3rd day down here, but there's always the opportunity, there's always the potential here that you would see a 3rd lower high, lower low. If we get an inside day, we have to wait for the following day, which could be Monday. So this one here will be really, really interesting over the next 2 to 3 business days. So that's actual trading days. And that is because we're coming out of a significant top. The significance of this top is that it's been running up now since September. So, sort of 3.5 months to this particular peak. So I'll keep watching that to see whether that is going to have any sort of impact on the asset prices rolling over, right? But for the S&P 500, at least in the last 24 hours, we had a nice close above 59.80. Is this over yet? Of course not. We've got one daily close above the 50% level, so that's a nice, strong short-term position to be in. The next stages are to get above the swing tops and the diagonal downtrend. So from this top, connecting the next swing top and the next swing top, currently running into that right now. So if the S&P 500 can break above, and even if it drops back to retest on top of this line and on top of the 50%, it's a good area for the US stock markets to consolidate in and then continue to climb. Last time we've seen this sort of move was back in August, so another extremely fearful event. We heard all sorts of recession talks come back there. We've also seen a lot of recession talks come back now. Some people suggesting that this is the final top. I don't think that is the case, purely based on our long term, our macro cycle here, looking at our 18 to 20 year cycle, real estate and economic cycle, not necessarily just the stock market. I suspect the stock market will rise higher past 2025. However, real estate and the economy might start to look like a rounding top somewhere 2025, 2026, and then you start to see some of those bigger news events come out where things would start to come down, where more people would actually be paying attention to it, probably sometime late 26 or even 2027, kind of like the GFC. The top was in 2007, but people really didn't start paying attention to it until September, October of 2008, a full 12 months later. So that's what we're looking for here. So we've had the CPI announcements. The stock markets have looked at this relatively positively. That goes for the S&P 500, goes for the NASDAQ also having another day up here, and also for the Dow Jones having another strong day up here. For the Dow Jones, the 50% level is pretty much dead on where we currently sit. So again, same sort of thing. If you can get some close above here, that could bring some strength into the US markets. And if we start to see a little more strength here, well then risk assets start to look a little bit healthier again. And of course, we've seen some of the altcoins and also Bitcoin pump up over the last 24 hours. But as always, you need that confirmation. The pump ups are fine. If you get in right at that bottom, congratulations. Otherwise, maybe you're looking for more signs of confirmation. So that takes us over to MicroStrategy. Just one of the stocks I want to have a look at today, maybe a couple of other tech stocks here. MicroStrategy has still been in this trading range underneath the short-term 50% level, but the good news for the MicroStrategy holders is that it's holding above $320, which is the longer term 50% level. It's not the longest, it's not the cycle 50% level, which is from this low in 2022 to the current top. That's at around 280, so a nice little bounce there at the moment. But still, above both of those levels is in a relatively good position for MicroStrategy, potentially leading into this next phase to the upside. It still has a lot of work to do. The main price that I'm looking for is any sort of closes above $450. But if you're a short-term trader, there's a lot of movement from the current price to where that is there. 20%, and however you decide to trade is up to you, whether you're putting your leverage on, betting the house on it, and you're doing anything stupid like that. Well, there's still plenty of room in terms of a trade. Do note you're at that short-term 50% level where the previous support has become resistance for the last 2 attempts now, or 3 attempts if you include the 24th of December. Had another failed attempt on the 6th of January, and yesterday's current price action has also been a failed attempt. However, you've still got a couple of days to go here, so Thursday and Friday. And also Tesla has had a reasonably good day up, still holding above the previous old all-time highs. So overall, the stock market is still in a relatively strong position. We haven't seen any sort of breakdowns from key macro levels as I've been looking at for all of the indices. Some of the tech stocks here have had their pullbacks. They may go further, but they're still above key levels, and also in the likes of Apple now attempting to get back above those previous tops. So the pullbacks are absolutely fine, especially in a period where there is uncertainty like what we've seen over the last couple of weeks. But that doesn't mean that the end is now. It doesn't mean the end is in Q1. We're just looking for longer term signs that we're beginning to see weakness at those tops. Like what we've seen with Bitcoin through 2021, there were some signs of those tops, which is what I'm going to cover in just a moment. Just a couple more pieces to get through here, especially with the macro cycle, the real estate cycle. We've seen a pump up here for the home builders ETF, a couple of very, very strong days. The key level is above $114 for this particular range. So what I'm measuring is top to the bottom, and then that 114 level for some consolidation above there. That would even put it above some of the previous swing bottoms. So that would be breaking back past the previous support. So you don't want to see that support become resistance, because that could lead to further downside. So a bit more room to go there for the home builders ETF. And why we're watching that is that it's part of the 18.6 year cycle. If you start to see the market not believe there is going to be further profits for the home builders, it could be a sign of weakening. That takes 6-12 months to play out, because they have been up for many, many years. So if you look at the overall picture here, that has been up since the lows going back to 2011, And you could argue to that exact bottom in the GFC of 2008, 2009, higher low in 2011. So these are some very, very long-term cycles. That's 14 years from 2011, and from 2008, quick numbers, what's that, about 17 years. So you're not going to know within a matter of days if a 17-year bull market is about to come to an end. It's going to take months for that to play out, and that's why we're paying particular attention to these corrections here. And this most recent correction is an overbalance in price compared to any of the moves since 2022. However, the 2022 move is still the largest. So if you did see something like that, larger than this move to the downside, that would be a pretty big cause for concern. We're not there yet, don't worry about it, but that's what we're watching, right? The financial sector is also seeing a pretty strong move to the upside. It's filled in some of that Trump pump gap here and is now pushed away back past those previous tops. And we suspect banking will also do relatively well in the second half of the cycle because real estate is doing relatively well, generally speaking, for the US. And you could throw Australia in there too, because that's what we're seeing here in Oz as well. And of course, the banks are doing well because the interest rates, no matter if they drop a 0.25%, 0.5%, 1%, they're still making more profits than they were in, well, a couple of years ago, especially in like 2022. That's why you're seeing more of the banking increase. Okay, so we've covered the energies as well, going up, potentially inflation to come in a 6, 12 months time. Gold is also climbing a little stronger here, breaking past $2,700. Silver also on the way up, and also copper, which is heavily used in the economy, is also finding some ground here. So if it's a heavily used commodity in the economy and it's going up, well, seems like you could make the logical conclusion, and we know markets don't necessarily rely on logic. Well, in this case, it's going up, it's being used, or at least the market believes it's going to be used a little more so in the future. It's got some work to do. It's got to get past $4.50 and then these swing tops here at around $4.80 to continue with that strength. But nonetheless, it's been trading around these high periods considering where it's come from in this cycle. Okay, that is the cycle. We'll continue to come back to that. Make sure you hit the like button, subscribe to the channel if you want to see more of this. Let's get on with Bitcoin and cryptocurrencies. The Fear and Greed Index. You and I, we're acting as simps for this freaking market at the moment. It is in greed yet again. Last month was an extreme greed, and we barely saw a touch into neutrality with the market sentiment. So everyone seems to be really, really hyped up still on the market. And I think, well, let's just leave it to the charts, regardless of what I think. Let's just focus on the analysis here and what has happened in the past, which has, well, essentially fooled almost everyone. You can throw that in the title because there are obviously people that see it, but it basically fools us every single time with this extra pump up of market sentiment and greed. Now, I'm not saying that this is the end. I'm not saying that it's, the game is over from this point, but I think it's important to watch that sentiment as, well, if the price leads into higher prices, meaning new all-time highs because of what has happened in the past without resetting the sentiment properly. Okay, so before we get to that, just a quick look at the Google trends here, Bitcoin and crypto. You can still see that things are progressing nicely at this point. Bitcoin at 29, crypto at 14. So there is still a higher search volume than there was prior to the election. So that's a good thing. And also prior to the breakout in 2023. So it's still above all of those lows. This is on a 5-year chart. So let's bring it down to some shorter term timeframes here to see where that interest lies. And over the last couple of days, we've definitely seen the interest increase. Obviously, with prices increasing, more people come back. They usually drop off as the prices are going down. They forget about the market, and then they come back when the prices are increasing. As you can see here for the search volume, Bitcoin at 38 and crypto at 24. So we hadn't seen these levels, at least for crypto. We have to go all the way back to the peaks back in December, or at least those massive liquidation days when there was 1.7 billion, I was going to say trillion, but $1 billion of liquidations there. Now for Bitcoin, it has begun to break past a couple of the recent highs. So there is interest in it short term, and as I showed with the 5-year chart, it's still trading above the previous lows. So higher lows are forming. Now with the longer term cycle, and then we'll get a little bit more granular here. Bitcoin 4-year cycle, as I've pointed out many times before, my view is that we are in a macro bull market prices will keep going up even when the masses were telling us that the game was over last year. If you remember from March, a lot of people thought we were in a left translated cycle and they thought the game was over. It didn't seem likely based on this. This is basically what kept us in the game this whole time. While the majority thought there was a recession coming, they thought the stock market was over, they thought everything was over, they forgot the lows, and then, well, the market took off without them again. So that's why I focus so heavily on watching what the broader economy is doing, and also continue to review our stock markets, our commodities, US dollar, and of course that all leads into the cycle. That's the importance of it there. I don't think you can just take Bitcoin at face value and say, this is what it is, it's going to go up even if the rest of the world is going down. It could, but I haven't seen that happen before, and I'm not going to bet the house on that it will happen in the future. Okay, so back to the cycle here. Right translated cycle. This to me is like the final boss, the grand final, if you want to call it that, if you're into some sports analogies here, because you're playing now with a lot more people in the market. You're playing with a lot more money in the market, as we've seen with the exchange volumes increasing, the interest overall increasing. There's a lot more greed in the game, and this is where things get far more difficult. You'd think that it gets easier at the tops. That hasn't been my experience. Maybe you know something more than me. Fantastic. Use that to your advantage. But at the end of the day, we are now in the final section because we've been up for over 2 years, right? And once we've been up for over 2 years, generally, at least what we've seen from the last 3 cycles, you see it go up for roughly 3 years. And I know everyone, it almost seems like everyone knows this by now, but markets, cycles have a funny way of continuing to repeat even when people believe that it can repeat. It has a funny way of continuing to repeat on different narratives, if you will. And so there could be some narrative that picks up in the next couple of weeks, couple of months, which then continues to ride this thing up into second half of 2025. Maybe it goes beyond into 2026, would be slightly different, right? But it's still a cycle that would then go on for over 1,000 days, like the other couple of cycles have done. But the point here is not to try and get too fancy or too smart with the market, thinking that, well, if everyone thinks that, it can't happen. Of course, there's always that potential, which is why we're watching out for any sort of signs that it's not going to extend to this point. But for now, it has been doing the things that it has done in the past to suggest that it is going to keep doing those things like it has done in the past. And in particular, these sorts of corrections that Michael's shown here on the long-term cycles. So each of these bull markets and then their bear markets with the 1 year down, you can see these corrections and how many days they've lasted from the tops to the bottom. And at the moment, Bitcoin's doing relatively similar things. You could argue that the last several months, the last few months here, haven't had very significant corrections after that 144-day correction. And that might mean that we could be coming up for one of those corrections in the future. And just before I get to that with how that could happen, we're also looking at the longer term cycle here for the Elliott wave. And it's possible that we've now run into the bottom of the wave 4, which Michael's now covered on the channel here since the lows in 2022 and 2023, putting this Elliott wave together for our major 5th wave. So this is the end of the end of the end. That's what all these little numbers are here for, looking at the smaller cycles within cycles within cycles. And it has been playing out relatively well. And if we are in the wave 5 of wave 5 of wave 5 of the macro cycle here, then at the end of that, that's where things go south pretty bad. Within that, there will probably be some pretty significant moves, and people will wonder whether this is incorrect. I guarantee that will happen. But overall, unless it breaks past the previous top, and that would be over many months, possibly even years, then it's all part of a massive ABC correction to the low. Too far ahead for us right now. We're just looking at this white zigzag, and the white zigzag is a possible play out of the price over the coming months. So if that's the case, still got further upside, nothing to be too bearish about here. Still time to go, for this, and still time to go here. So overall, I'm long-term bullish. It was just pretty much in the short term that we're just watching for any sort of corrections here. And so let's throw on some of these lines and resistance levels. As we've looked at over the last couple of days, in particular with yesterday's video here, looking at rally into the resistance and dump to 74, I left a comment here in case you didn't watch the first 10 seconds of the video. I don't think there'll be a dump to 74K at the moment. You know, this could be the low end for this particular move to the downside, and that would be 27 days to that low. So we're at 29 days, actually 30 days now, underneath the old all-time high off the back of our 3-day rule. The resistance at 100K still stands. We've had one daily close above it at 100,500, and of course you can see the other swing top here at $102,700. So if you wanted a nice clean number, call it 103,000. Some closes above there would then be the consolidation for the breakout to the tops, which could spell a little bit of a disaster point longer term for the rest of this cycle. Now, there could be a big correction that resets things, but like we've seen with each of these moves into greed, and without a long reset, that meaning the market sentiment going under the neutral zone and potentially into the fear zone, the moves to the upside are generally short-lived. Short-lived is relative to you. I think short-lived is, in this case, well, short-lived to me is basically a month or two. I want to see these moves to the upside last for 6 to 12 months with some corrections in between, but generally 3 to 6 months without too much interruption, correction, and then another, 3 to 6 months to the upside without too much interruption. This was obviously a big interruption. It was an 8-month interruption to the uptrend, but you'd already had 6 months of uptrend going from August, September into the peak of March. So a solid 6 months, minor corrections here of 20% into that final peak. And then you had 8 months of correction or interruption, right? Before this next move up, August into December. So that's about a 4-month move. Currently, as I said, we've seen roughly a month of an interruption, a corrective move. So what we saw in the past, when it only spent a handful of days, a couple of days here, it dropped to 54, then to 43, then to 48, got back into the greed, another day or so into the neutral, which is yellow, and then it pushed higher into the greed. It even touched extreme greed for a few days there. So it's got to be over 75. This day here was 76, 74, 76, 78, 77. So a few days of extreme greed. Wasn't able to get past those tops, and then it corrected again. That, if we don't see any consolidation above these levels, with the sentiment just holding steady and maybe even resetting into neutral, and that's obviously what the bears would want to see, potentially another dip to lower prices, somewhere in the mid-80s that we have covered before in terms of the extensions here, the fib extensions down to roughly $85,000 or $87,000. So that's the first look here, where it's basically ran up into extreme greed, pulled back, touched for a few days into a reset, and then got into a lower high on the market sentiment, lower high on the price chart as well, without breaking past those previous tops. And that's why we are very much watching around 102 to 103. A break past those tops in consolidation, it can continue to move on, just like what happened in 2021. So going back 4 years ago, you had these tops all in extreme greed. It lasted for quite some time in extreme greed. Swift pullback, like what we've just seen. It dropped back into fear and, neutral and fear. Jumped up, touched extreme greed for a day, pulled back, and then continued higher. Now it started to put in lower tops as it passed through February. Nice reset again into fear, pushed higher again. But as you can see, the market sentiment, so basically the participation started to wane. People started to get not as interested as what the price was suggesting. So you could see the sentiment was dropping off, clear drop off here. That the extreme greed was basically disappearing from the market, but you could still hear the retail just screaming for $80,000 or $100,000, but the price was not getting there. And you could see these tops all basically started to fall flat of $60,000, barring this one little test into 65K before a very significant correction there. And that was basically, again, the 3-day rule. 1, 2, 3 days down from a very significant top led to this low, very significant correction, taking out swing bottoms, and then forming a lower high. So basically a complacency bounce, which was very, very loud at the time. So that one there, I think, is going to be the biggest thing to be on red alert for moving into any sort of prices that that rise above 108K. So I think that's the threat of moving into a new all-time high price. And look, I know that's difficult to hear, especially if you're new to trading or investing. The game is literally just all about risk and reward. What's the risk? What's the reward? What's the probabilities? And a lot of people dislike hearing those sort of things. I'm literally just reading off the chart what happened each other time. Every time that the market does not have enough time to reset. Look at this big reset here. A nice massive reset. You had huge pumps. When the market doesn't have time, that's the people who are trading, not just me, but everyone else who is buying and selling. When there is not enough time to hold back and consolidate the move, generally you don't see prices move that much higher, or they don't stay that much higher for very long. You could argue that's a fantastic range to trade, right? You're going from this reset point at around 33, 34,000 up to these peaks. You still have around 80% to trade. So, go in and out, plenty of trading ranges there. But if you're looking to hold long term, you're saying, I'm just buying now and I'm holding for the next 3 to 5 years, probably not the best place. Just looking at probabilities in the market and your risk and reward longer term. That's all it's about, right? So if you are trading, forget about it. Just do you and continue to trade to the upside, provided the swings are there, which we had seen. I'll jump straight to XRP here on these swings here. So regardless of what I think of the project, to trade, different story. Look at the members here, TIA Premium, trading XRP, making massive gains, 300%, 230%, plenty of other things here that they're all trading. And I think there's another XRP one here from Polkadot Fanboy, $1,500, nice on the day, well done. But cheers to Jason and Michael for calling XRP. So well done to you guys who are actually trading these markets and not getting too emotional about it. At the end of the day, just make the money and get the hell out of there. That's all it's about, right? We look at the total cryptocurrency market caps, same sort of thing here. They've started to close above 50%. There are still 2 levels above 3.55 trillion and 3.65 trillion. So they're the swing tops. But at the moment, we've had a day above the 50%, and we need to wait and see whether we do get those extra closes and break above those next levels. So longer term, I definitely see some further upside here. It's just about whether the market has that strength in it now for those even bigger gains or even longer term moves to the upside. Like you can see here, great stuff. Close above 50%. Still at the moment, maybe in the next 24 hours we get a high above it, but it's still above roughly 870 odd billion. So this is the true crypto, true altcoin market cap without Bitcoin, ETH, and stablecoins. You get the lower highs here at 900 billion, and then the tops there at about 980 billion, just like what happened last time. You got a top, lower top, lower top, lower tops, lower top, lower top, and then you finally start to break out here at some higher tops. But it's held back until you get that confirmation. So that breakout with the next breakout above the previous higher swing tops. So at the moment, we are looking like we're still above those levels, but it could start to break above. That's the confirmation there that you're looking for with each of the markets. ETH, Solana, and Sui, they've all had pretty similar days here, or at least ETH and Solana have. Sui on a different page that we'll get to. So ETH is at now $3,400. The level to beat $3,500, and those next swing tops at $3,700. Good sign is at least you got a little bit more volume coming in here. And even if there was going to be any further downside after testing these levels at 3,500 or 3,700, the downside I think would be a lot less. There's the probabilities of it being less than what it was before if it continued to close below this 50% level. So the fact that it closed above $3,200 means that the downside is less likely, or, which is still a good thing, or it's just subdued. It's not going to be as great as what it had been in the past. So you're starting to see smaller swings to the downside. Same deal goes for Solana now. Big swing to the downside, smaller swing here, If this rejects it, 216, 223, whatever it might be, then these downsides have the probability has increased that it is not going to do something like that previous downside. That move was about $89 from top to bottom. Therefore, the probabilities are now less that you would see an $89 move to the downside. So you probably would not see it go under $110. So SUI, although it's met one criteria, it hasn't met the next couple of criteria here for the top now confirming. It's not there yet, but it's closed underneath those highs for a few days, underneath $5, still above the 50% level, so still some strength there, and it's above all of these swing lows, so it continues to put in high swing lows for now on the daily, and it's still above the major 50% level of 290, because in the last movement, there were multiple signals, triggers, essentially, that had to happen for the move to be over. It closed underneath that high, but it didn't mean that it had to completely break down from that point. However, in that case, it did the very next day. It broke down, broke the swing lows, and then by the time it got another 4 days later, it started to break the next swing lows, lower swing top again, and then by this final move, it broke down past the 50% levels. And that was basically the nail in the coffin that any of these rallies to the upside were going to be dead cat bounces. And that's basically what's happened. So we have not seen those signals yet. Those signals would be breakdown of the swing lows and then breakdown of major 50% levels. We'll continue to follow it up on the channel. Make sure you like and subscribe to the content if you haven't already. And then the links in the video description for your free crypto and economic report, plus quick start guide to learn how to trade and also using TradingView the way we do here, the way we do here on the channel. I'll see you guys at the next video. Stay tuned. Until then, take care and peace out.